Because we're going to be looking at another family of life income gifts. You make this gift to that organization. You don't have a lot of flexibility because it's a contractual arrangement where you say, I give to you charity, and charity contractually agrees to that. And then what happens is that when the obligation to pay income no longer exists, i.e., your actuarial lifetime actually does happen, then that is freed from that reserve account and it goes to the charity. Is it $10,000? More than likely, no, because there could be 5, 10, 15 years that goes from the time you take out the annuity to the time you pass on.
Jim, is there any cost to give you a call and say, hey, I'm considering a gift annuity for $5,000 or $10,000. I want an illustration like this, and tell me what amount is tax-free, how much is taxable?
Yeah, the illustration that Peter's referring to is, no. Again, you can even do that if you wanted to. You can go to our website and you can do the calculations for yourself. I can do, yeah, I can, yeah. We have it on our website. I'm a firm believer that people just need to know what's out there in terms of choices and investments and things like that, and giving. So if you know what you can do, then it helps you to make a decision, okay? So yes, if you call me and say, well, how does that work in my situation? You give me your date of birth, I send it out to you, and that's fine. And if you say, I like this, you give me a call. If you say, okay, nice, but I'm not interested, nothing. But the important thing is to have that information. So if you like the concept, be happy to do the calculations. If you like the concept and you just happen to be married to the University of Michigan, God bless you, and you say, I'd like to do this. Does the University of Michigan have that? More than likely, I would think that the University of Michigan has it. Yes, sir?
If the funding for the gift annuity comes from an IRA, are the tax advantages the same? Or
no, unfortunately. Good question. If you were to transfer money from your IRA to the gift annuity, we're not going to get the benefit, because what that is going to be basically is you're going to have to say, I take out $10,000, I pay the taxes on it, then I give it. A better scenario, and again, you could crunch the numbers here, we run into this quite a bit where people have stock that they've had for 100 years, okay? And it's bleeding out 1%, 1.5%, 2%, and it's gone up in value substantially. So maybe they bought the stock for $25,000 25 years ago. Now it's worth $250,000, and it's still just giving that little drip of income. That would probably be a very good asset to look at in terms of funding the annuity, because what would happen is, if you were to otherwise sell that asset, you would be subject to capital gains tax. However, if you transfer it to a charity, we don't have that capital gains tax.
But and on death, it would be awesome to do out of your IRA.
Oh yeah, your IRA, yeah. IRAs and charity at death, that's a, and then also currently, as far as and you really have to be philanthropically motivated. If you want to support a charity, they now reinstituted making gifts directly to your charity up to $100,000 from your IRA. So IRAs have good, you can use those things in certain ways, but they cannot be used. It's a good question, a great question. I expect good questions from this side of the room too, okay? Because we've gotten 2 good questions over here, so we got, but no.
The old divide and conquer.
Oh, hey, listen, I'm going to lean over here. All right, so that's the concept of gift annuity. Now, let's take that gift annuity, that concept. Keep it in mind. You give an asset to the organization. Organization gives you an income for life, and then at the end of your life, whatever is left in that. Has anyone heard of a reverse mortgage?
Yeah.
Okay. I mean, it's a big thing. Who's the actor now that's trying to sell it? I think he gets a commission. Robert Wagner. Yeah, Robert Wagner. I got a deal for you. Well, I got another deal for you. If that concept makes sense to you, a lot of charities will also take and use this very thing and incorporate it into a 2-fold gift. Let me explain to you very quickly. It's explained here, all right? So you have some stuff to read over the next 3. Let's turn right here, okay, to this one right here. It says charitable gift annuity for Ellen Keller, because this gives you all the lead in. What happens here, Ellen has a house that's worth $800,000. She lives in the poorer part of town, okay? What she essentially does is she creates first a life estate. A life estate simply means this. I decide to give to you, charity, my house, but I reserve the right to live in it for the rest of my life. So the title is actually redeeded so that charity owns it and I reserve the right, okay? Now, both have value. And if you were to stop right there, you would have made a gift that you would have gotten an income tax deduction for. Does that make sense? So we're talking about value. We're talking about irrevocable transfer of assets, the real estate. Even though the charity doesn't get it right now, we again use the actuarial tables. It's all a matter of numbers and calculations. Now, what we do is we take that resulting income tax deduction, and I think it's here somewhere. Life estate. Oh yeah, $595. So yeah, top here, we have. She would get an income tax deduction of $595,000. Well, she doesn't need an income tax deduction. She doesn't have a tremendous amount of income. She's looking to get more income. So what we do is we convert that income tax deduction and put it into the annuity. So what we do is the charity funds the annuity. It's all a matter of calculations and everything, because the charity does have an asset. It's named as the owner of that property. Bottom line is that she winds up with getting $48,000 of annual income for the rest of her life. She has essentially created a reverse mortgage using the gift annuity. So again, I don't want to go into details, but if you know people, if you yourself are looking at possibilities, just have people stop and say, well, are there other ways? Because that's the most important thing you can get from this whole series. Is there another way? How can I do what I want? And what's the most efficient way? And what's going to be best for me? All right? Should always be what's in it for me. I always like to say that in estate planning, the most important entity, not the children or anything, I want to make sure I have enough money for my lifetime. And if I knew exactly when I was going to die, I could probably figure it out that way. So that's, yes ma'am, I'm glad that you finally come over.
I was just wondering, a woman aged 85 and you're selling her an annuity, when her actuarial age has already been reached.
Oh no.
Because I had 82, I thought.
No, when she's, no, hold on. Good, very good question. No. When I'm 65, actuarially speaking, I'm supposed to die at 82.5. But when I'm standing here at 82.5, they say, oh, wait a second, he made it to that. So actuarially, probably another 6 or 8 years.
There's a joke amongst the fundraisers that anybody who does a charitable gift annuity
and this is true.
actually lives actuarially 2+ years longer than the rest of the population. Yeah. It is really true. I mean, the universities, they sit there going, oh my gosh, all of our annuitants are over 100 years old.
Okay, so it's a good question. Again, we're looking at just putting little bullet points up here about concepts that are extremely complex, okay? But I want to talk about what would be the benefit to me, all right? What are the hot points? I'm basically a salesperson. I work for a charitable organization, but I'm successful when I am able to communicate ideas and concepts. I'm not successful when I can say, this is what a gift annuity is. I'm successful when I say, let me ask you what your situation is, and then I'll say, well, how about if we could do thus and so? People say, I didn't know I could do thus and so. So it might be a gift annuity, it might be a child remainder unit trust, it might be a child remainder annuity trust, which we're going to be talking about, and the water gets really deep there. But conceptually, yes. So you have to look at these things. Does it work for me? I want you to be able to say right now, and how many can raise your hand, all right? How many of you, is this the first time that you've ever heard that you could possibly have something like a reverse mortgage using a charity? So, case in point, whether or not it ever works out that you do it, that's immaterial. The most important thing is that you know it's there. All right, now we're going to move right along. We still are until 3 o'clock, right? I want to make sure I'm on time.
3 o'clock, yeah.
Okay.
And you're serving alcohol.
Yeah. I'm going to do a little side thing here right now, because in the area of charitable giving, many times I work in the area of non-cash. Typically, 99% of what I do is non-cash. It's stock, it's businesses, things of that nature, it's estates. Sometimes when you have a person who is philanthropically motivated, the best asset might be a building that he or she or they own, okay? So let's say I'm at the university and we've got this big building project going on, and it's a $20 gazillion project, and one of our major alumni has many buildings. He has so many buildings he could easily give us one. So what we will do is we'll approach this and say, you know that you have that bank building that you've had for a number of years. It's completely depreciated, and it's worth $5 million. Would you give it to the university? Sometimes people will say, yeah, I never even thought about that. Thanks for bringing it to my attention. Because they really care about the organization, and the organization has brought to them an idea of just give us the real estate. And so all of the paperwork and everything. Sometimes that may not resonate with me. I say, nah, it makes sense. I would like to do something, but I just can't bring myself to making that gift. So the next thing that might resonate is, well, would you consider a bargain sale? A bargain sale simply means bargain. Now, many of you women, you know what a bargain is. You go out and get it. Men, you're kind of oblivious to those things. But a bargain sale simply means this, that the organization and the donor agree on if this property is worth $5 million appraised value. What's that?
We buy it 10 million.
No, you buy it for less than.
Yeah.
So the donor and the charity agree on a bargain. So it's worth $5 million, and let's say we agree on $3 million. Well, you've just made a $2 million gift.
Isn't it a kind of conspiracy so-called against the government?
No, there's not a conspiracy. The thing is that, as I said before, I think that life is much better run by the not-for-profit sector. And so, let's look at it this way. You've been looking at the broad picture of estate planning. Now, when you start getting into the area of estates that are $10 million or more, you've got an estate tax situation. Think of estate tax this way, because I deal with people that have $50, $100 million estates, and they can understand this very, very clearly. The IRS is good to you in some ways. At death, you, if you have a taxable situation, have the choice of 3 potential beneficiaries: your family, government, or charity. And they say, you can pick any 2 that you would like. Now, given the choice, what 2 would you pick? Family, I would assume? You love the government? You can do that. But what people don't know is that they have a choice. And if it's a matter of giving it to the government or giving it to charity, all I want people to do is know that they have the choice. Whether or not they do it, it's a whole other thing. So that kind of, no, we're not playing the system. It's designed that if people are charitably motivated, there are benefits. And so the incentive is to be philanthropic. So now that didn't work. That idea didn't. Let's assume, okay, I can't give it to you outright. You've talked to me about this bargain sale. I don't quite like that as well. The next thing we're going to talk about is a charitable remainder unit trust. That's that little thing right there. Now, does that look somewhat familiar? Yes. Conceptually, it's no different than the gift annuity. But we have just gone from about, say, 1,000 feet in the water to about 2,500, 3,000. This is very, very complex. There's a lot of moving parts there.